Okay, welcome back. This is Trevor Crow. The show is Trevor and Friends. And right now, sitting next to me is Sabrina, and it's Ciarleglio from DiLeo and Charles. Welcome to the studio.
Thank you.
I did it.
Thank you for having me.
So, continuing on some interesting financial thoughts today. Today, the show sort of overall financial planning, but thoughts on how to do things right. And it happens to be Giving Tuesday today, which is our jumping off point because I personally use DiLeo and Charles. They're based in Rye. Sabrina herself is based here in Greenwich. She is a tax preparer and accountant. DiLeo and Charles have helped me over the years kind of keep track of what's going on in my business, which is Trevor Crow, trevorcrow.com. And I really appreciate you guys. So that's a personal testimonial from me. But talk to us about Giving Tuesday and why it's important and sort of it's a good thing to do, right?
Yes,
but
absolutely.
also it's the end of the year and it could also be helping you tax-wise.
Yes, yeah, it's a great tax strategy. And of course, we're in that season where people are thinking about charitable giving. Like you said, it's Giving Tuesday. So this is a great time before the year ends to think about how your giving can possibly help you on the tax side. So, of course, you don't want that to let that be your driving force, but a lot of us are fortunate enough here in town, especially to have extra to give to others.
Yes, and we really do have a very philanthropic population here in Greenwich. People are very generous, and Giving Tuesday is a great time you can get online, you can search for Giving Tuesday, but it could be any group that you care about. It could be the YWCA. It could be, I'm on the board of Laurel House, so a shout out to Laurel House for mental health support. Lots and lots of charities are out there. You can just give some money. And again, to that point of it's a great thing to do, but also it's helpful to you tax purpose wise.
Yes, and to that point too, we have a lot of local charities that we can support. So not only national charities, but local causes that are close to our heart.
Yeah.
So, just one thing to touch on what you mentioned, we want to make sure, and I'm going to go over this later, a word of caution, make sure that charity is a registered tax-exempt organization.
Good point. Very good point.
So, and there are different types of ways we can take advantage of it. So I want to talk a little bit about current law and what we want to consider in 2025, and we will touch a little bit on some of the new changes with the OBA.
Oh, great. That's helpful.
And so, for instance, in 2025, charitable contributions are only going to be beneficial to you on the tax side of your itemizing. So that's something to think about. We do have a really high standard deduction right now for taxpayers, so that may or may not be relevant, but that is something to consider. Again, shouldn't be the driving force of if you're going to make a charitable contribution, but from the tax side, that's important. And then, especially if you're at that edge or that threshold where if a few more donations, you would then be able to itemize. That's something to look at now before the year ends.
And okay, so tell me if you're at that level, what would you think about? Would you be like, okay, I'm close to this, maybe a couple more thousand.
Yep.
If I were to give to the Boys and Girls Club or, Ableist, I'm just throwing a few of our local charities out.
Yes, that could definitely help. And of course, there are other caveats. Every tax situation is different, but there are a few rules. So for instance, if it's a cash gift, your AGI is going to play into it. You're going to look, and FYI, AGI is your adjusted gross income for those that aren't familiar.
Thank you.
2024, if you look at your 1040, it's on line 11. So cash gifts are deductible up to 60% of your AGI. If you're donating appreciated assets, they're usually limited to 30 or 20% of your AGI, but most people don't hit these limits.
Okay.
So again, you can look at your individual situation.
When you say donating a depreciating asset, you could be donating possibly a car.
An appreciating asset.
Right.
Yeah.
Okay.
Yeah.
Or appreciating it if I gave stock.
Yes, something that's increased in value.
Oh, increased in value. Okay,
Yes,
got it.
And then of course, we'll touch on cars later.
Okay, so that would be a depreciating asset. Correct. Yeah.
Usually. And so, some examples of these appreciated assets are, for instance, stocks that had a significant increase in value, maybe cryptocurrency that has had big gains, real estate that's appreciated in value, and what it can do is potentially help you not only get a full deduction, but avoid the capital gain tax.
Okay, so if I bought some crypto last year in January, it was still pretty low, say 88 or 70 or something, and then it popped up. So there's capital gains. So I can donate at the capital gain level and not get taxed on it, or I donate it at the basis where I bought it.
So you would get the full value.
Full value.
Yeah.
Okay.
Yeah. So
Okay.
I'm going to give you actually an example. So for instance, if you have $10,000 of stock and it has a $2,000 basis, if you sold first, you'd owe tax on $8,000 of gain. But donating directly means no tax and the full market value deduction.
That's pretty good.
Yeah. So
Yeah.
not a bad thing to look at.
Yeah.
Especially if you don't want to get hit with that capital gain.
Yep. Yep. I like it. And
then of course we have a few changes with the OBA. So
what is OBA?
the one big beautiful bill.
The one big beautiful bill.
Yes. Signed into legislation on July 4th.
Pardon me for grimacing. I'm sorry, people.
There's a lot of changes to keep up with too.
Okay.
But specifically on charitable contributions, there are a few additional limits. So. And the reason we want to talk about it now, even though we're in 2025, is it may affect your strategy in 2025 because of new limits that are coming into 2026.
Very important. So
Yes.
you might be able to give away more now. So be aware of that, because next year we'll not get the same deduction.
It's going to be a little different. So there's additional limits. So there's a new rule for itemizers, and I'm going to give you another example, easy math. So if you itemize and your adjusted gross income is $100,000, your charitable contributions would have to exceed 0.5% of your AGI. So in this instance, $500.
Okay.
Then the amount above that would be deductible on your Schedule A if you're itemizing.
Okay.
So, that's a limit. Then there are, for people who are in a really high tax bracket, they will also be somewhat limited, and we don't want to go into the specifics because there's so many different scenarios that we could talk about. But again, talk to your tax preparer and see if that applies to your situation.
Yeah, there's a lot going on here, and it's such a good idea to meet with somebody who really understands this to this level. So right now I am talking to Sabrina Ciarleglio. Ciarleglio, from DiLeo and Charles. And again, this is Trevor Crow, trevorcrow.com. I've been using personally DiLeo and Charles to help me with my accounting for now like 5 or 7 years.
Yeah, it's
a
been
long
a while.
time. So this is a personal testimonial. But I got talking to Sabrina about this particular issue about giving, etc. And I was like, we need to hear about this on the show.
Yeah,
right?
Absolutely, because people don't think about it until it's already too late, or it's tax. The tax year is over, and then they're just going through the receipts.
So your recommendation for somebody who needs to really think about, do you give a little more now because 2026 is going to be different? What's your kind of general? Because I know everybody's different and it's very complicated. But what's your overall thought?
So if you tend to give larger donations, you might want to look into bunching more of your donations into 2025.
Okay.
So maybe look at the next 2 or 3 years and see if you can bunch it all into 2025. There's also other vehicles related to that we're going to touch on, like donor advised funds. But I wanted to mention one other new thing to consider for 2026. It's not all bad.
Okay. Please, God.
For those who do not itemize, they will be able to take an above the line charitable deduction. So it is up to $1,000 for single filers and $2,000 for joint filers.
Okay.
So even if you don't itemize and you are a donator, like to give charitably, that is something that you can take advantage of.
That's terrific. So if I give $1,000, I could take that off of my taxes. That's actually
it could be a deduction.
Yeah. Great news. And $2,000 if it's a couple. Is that right?
Correct.
Yeah. Not bad. Okay, that's good to know.
So then, that's great for a lot of everyday people who like to still contribute, but maybe don't have a lot of the excess funds to do the larger contributions.
Absolutely. All very, very important. So this leads us to, donor advised funds, which you started explaining to me on the phone the other day. I was like, okay, this is going to be a lot.
Yeah. And of course, these are kind of these things that exist outside of the tax side, but they work with it. So a donor advised fund, it's something that you can think of as a charitable investment account that you do get to control. You get the tax deduction, and you can make grants to charities. Each one has different rules as to how much per year you have to donate out of it. The thing I like personally about it is that you could, let's say you don't put $100,000 into donor advised fund. It will continue to grow because they're typically being invested. So let's say that's all the money you can budget for your whole life
Beautiful.
of charitable, it's
Yeah.
going to continue to grow. So your charitable giving
Mm-hmm.
will continue even after that initial contribution.
So it's such a good idea, right?
I think it is.
So you put this money with a separate fund, a
Mm-hmm.
group of people, professionals who are investing this money, and you can tell them how much you want to have donated per year. Is that correct?
Yep, yep.
And I'm assuming these donor advised funds have track records. You can see how well they're doing in their investments.
Yeah. So,
Yeah.
and there are certain ones that are designated this way, and a lot of larger banks like Fidelity even have their own donor
Okay.
advised funds. So
Great.
if you're already using an investment firm, I would maybe ask your financial advisor if they have one. And if not, I'm sure they can recommend one, like the National Philanthropic Trust Foundation. There's all sorts of different entities
Such
out
a
there.
good idea.
Yeah.
And so, if you put in that 100,000, expecting to have it donated over a period of say 5 years, you get the immediate deduction. Is that correct?
Yep, exactly. In that first year.
Pretty good.
Yeah.
Yeah.
I like I said, I think they're great. I think
Yeah.
more people need to do them.
So you're suggesting that maybe this is a good thing to do when you have a big liquidity event, something like a business
Yes.
sale. You sell equities or income
Yes.
volatility. Is that right?
Yeah, yeah. And I think that in a town where we have a lot of people who are in the finance industry, they may have a big event that happens in a year. Sometimes income can fluctuate. So if you have a really big year and you have the funds to do this, it is definitely something to look into.
Great. I mean, again, I'm learning something new every day, and thank you for giving me a background on that. So there's some different. Let's see. We've got highly tax efficient donations, including appreciated securities,
Yep.
crypto assets.
Yep.
And are you seeing a lot of crypto donations? I'm just curious. Is that gained? I mean, crypto has come roaring to the forefront. I mean, we had FTX, which fell apart. Remember Sam Bankman-Fried, right? Went to jail. I mean, it seems like crypto, and certainly with the Trump administration, has become far more acceptable. I still not really sure it's really the best investment. Right. Still pretty iffy, right? Don't
Not
you
not my forte for sure, but we don't see a lot of people doing these types of donations with crypto, but it is something that maybe they're not thinking about because some crypto over the years has appreciated vastly. So it's something to think about. There's a little bit of this gray cloud over crypto still and and digital currency and the ways that it's supposed to be handled. But, it's an asset. It can appreciate. And this is another possible tax strategy.
And that it's something, again, I wouldn't have thought of it. It's a great opportunity to donate, and whatever entity can be absolutely happy to accept those crypto assets, put it to work, and that's a great idea. Now, real estate, do you see a lot of people donating real estate?
Not frequently, but I do think that we have that a few examples around town. We've seen some estates and land trusts that have been created over the time period. So we do see examples locally. But again, it's a great way to give back to the community and get that tax advantage.
It's a wonderful thing, especially when someone gives land, say, to a land trust, and people can hike and walk on it, et cetera. I mean, it really is.
I personally take advantage of that.
Oh, you do? Me too. I mean, thank goodness for Todd's Point.
Oh, yeah.
That was given by it's now Greenwich Point, but what an incredible opportunity we have to get out in nature here in Greenwich.
Absolutely.
So, so you're saying that before you go do this and you donate a great deal from one of these asset types, like whether it's crypto or real estate, suggesting an appraisal.
Yes, absolutely. So the IRS loves to have substantiation of records, and of course we want to abide by that. So we want to get an appraisal. Fair market value comes into play a lot of times. So, and we're going to touch on it more also with other types of donations, but you always want to substantiate that deduction.
Okay, so think about this, everybody. If you want to give before the end of the year, go get that appraisal pretty quickly.
Yeah.
Right?
Yeah, absolutely.
Yeah, because you've got to substantiate. The IRS is going to be looking into these things, so have all of your documents ready. And
yes.
Yeah.
Can't emphasize that enough.
I love that. Okay, so what are the common mistakes that people tend to make around this giving.
Yes.
And again, donating anything is fantastic, and it's really important to help our fellow humans in all different ways. We've had Demetria Nelson from she's a commissioner of human services here in the town of Greenwich. We had SNAP benefits actually as of December 1st or just now under new job requirements. People are losing a lot of things. So it is important to be generous and donate. So I just love this conversation. And again, in Greenwich, we have a lot of very philanthropic and generous people. So what are the common mistakes that happen here?
So some of the ones we see a lot are crowdfunding and GoFundMe. Those are not deductible.
Oh.
Although if you really want to donate to a cause, don't let that inhibit you, but it's not going to help you on the tax side.
Okay, that's very good to know.
Some of the other issues we see a lot is documentation, which we just touched on.
We just talked on that, yeah.
A lot of times people do not get the receipt and they want to, especially I've seen people who have donated many thousands of dollars of goods, but don't actually get any sort of substantiation of it. And so, of course, like I said, the IRS loves those records. That's what's going to verify everything that has been done on the tax return. So, some of the documentation rules that we talk to our clients about is any gift that is made over $250, you need an acknowledgement.
Okay, so if I go to Goodwill, I've just done a really big Swedish death cleaning, if you will. We just talked about that.
I did hear that.
Because I don't want to leave a lot of clutter for my kids when I go. Hopefully that's not for a while. So I go to Goodwill and I ask for them for a receipt. Is that correct?
Yeah. So what they're going to do, what I've seen a lot of times is Goodwill's are just going to give you a blank receipt. And you have to fill it out. So what you want to do is document what you gave, especially with goods. Fair market value can play into it. So you want to document with a picture even.
Oh, okay.
And especially if it's a substantial amount. Document, make a list, do your research with the fair market value. If you do it and don't make your tax preparer do it, they're going to really love you.
Am I to deduct that you deduce? Excuse me, that you've had to.
We have, yes,
develop fair market value. So, but that's such a great idea to photograph it, right? If you give a lot of clothes or maybe end tables or whatever it is, have a photograph on hand so you can give it to your tax preparer.
Yes, please.
Because Sabrina will appreciate that.
Yes. And one thing to keep in mind: so if you give cumulative gifts that are less than $250 each, you don't need this letter of acknowledgement. So if every month you're donating $25 and so it exceeds over the year $250, that's fine.
Okay, so if I'm at church and I put $20 in the basket, I can just say over time I've given $250.
Correct. But we love not only the IRS but your accountants, tax preparers, we love records as well. So please know when you did it. Was it cash? Did you write a check, etc. And keep those records on file.
Keep those records. Yeah. Oh, I like that. Okay. So $250 you can still put in there. Okay, takeaways. What are some of the practical things we got to be thinking about?
Okay, so number one, think about what's important to you. I do not recommend letting tax be the driver in the situation. Do what's important. What's going to make you feel good and see that effect of your giving in the community. Plan ahead. So you want to every year, early in the year, think about what you want to do for giving. And then definitely revisit it at the year end when you're doing tax planning. If you're not already meeting with your tax planner, financial advisor in December, you should be before the year closes. Coordinate with your tax preparer and your financial advisor with a lot of these. And then always keep good records.
I love it. Okay, so just a reminder out there, be sure to meet with your tax planner before the end of the year, right? Just to have an idea, get your arms around what you might be able to donate. I have a crazy question. I don't think this is deductible, but what if you do a lot of volunteer hours?
Yeah.
Is there value to your physical working, say, you were in the soup kitchen? No.
Not that I've discovered.
Yeah. But it's kind of because I do believe in volunteering, and it is your efforts to make people's lives better are valuable and important. But kind of to your point is decide what you want to do and whatever is important to you and your purpose and what you think you really care about. that's where to go.
Absolutely. And one thing about the giving of your time, your mileage
Oh,
can be tracked and possibly deducted as well.
okay, that's important
Yeah.
too. Because I do have friends who do the color ride, and
Yeah.
that's great.
Yeah. So,
Yeah.
and one of the other takeaways that we talked about earlier, make sure it's tax exempt. There is a tool on the IRS website to research the organization to confirm
Okay.
that they're a bona fide tax exempt organization.
Yeah. So, just kind of a thinking about rolling, like GoFundMe, those kinds of things. If it's really important to you and you want to help, maybe it's a family or whatever out, that's
Right.
great. You cannot deduct it though.
Correct.
Yeah. And I'm not sure most people understood that, right?
No, absolutely. Every year I have someone give me receipts for GoFundMe.
Oh, gosh. And
Yeah.
again, some of the things that people are looking for money for are really, yeah, I mean, they're important, but it's something to remember. Yeah.
Yeah, absolutely.
I think it's great. So, have you ever had the situation where people gave too much?
Not that I've come across.
Yeah.
So continue to give. Maybe we just don't have those types of clients. But
Yeah.
no, I do see that a lot of people in this area from between their businesses, they love sponsoring different charities. They do like to give, and especially because we have all these local organizations where we can take maybe goods we're not using anymore but are in great condition and let someone else benefit. We see that a lot.
Beautiful. And there are some faiths that believe in tithing, right? I mentioned Howard Stevenson, who is near and dear to me. He grew up in the Mormon church. He is not part of it at this point, but tithing's been very important to him and my mom over time, and they've given quite a bit. But do we have that? Is that still alive and well here in Greenwich? Are you seeing that from
Yes.
your clients?
Yeah, a lot of donations to religious organizations, absolutely. And we earlier mentioned making sure that you get acknowledgement letters, so even religious organizations can give that to you for those donations over
Okay.
$250,
So you can deduct that tithing
as long as they're registered correctly.
as long as they're registered.
Yeah.
Okay. So
So-
can you go to your church and make sure that they're 501c3 or whatever
So,
it is?
so usually what they're going to do is they will give you an acknowledgement letter with their EIN.
Okay.
And you can always,
So-
if you're not sure, you can always take that EIN and look for that, or you can look for it by name on the IRS website.
Very important. Okay, just tell everybody, what is an EIN?
Oh, it's an employer identification number, or basically it's like a business's social security number.
Okay, so this is an incredibly important point here, which is when you're thinking about your donating, whether it's tithing, whether it's religious, or you're even wanting to do something with a GoFundMe, be clear and do your research. Know if this is deductible, and the IRS will, acknowledge and support that. And you need all your documents.
Yes, exactly.
Really
Especially
incredible.
if that's kind of your goal between the dual purpose of charitable giving plus the tax strategy.
Right. So it is Giving Tuesday. Have you got a plan for yourself for Giving Tuesday?
So I do give throughout the whole year,
Yeah.
but it is a motivation to me to try to make sure that, because I do have a lot of goods that I've gone through, maybe get it out, make sure it gets to those organizations before the end of the year.
That's really good. Okay, so if a coat drive, for example, would you? I guess you could take a photo of the coats that you might be. I know Greenwich Human Services are finished with their coat drive right now. I was asking Dimitri about it, but would you be able to say I donated X amount of coats to the coat drive?
I mean, again, documentation, because there could be a situation where it may or may not be deductible. So document what you gave, the organization that gave it to you, see if they'll give you a receipt.
So I believe here's another shout out, Friends of Nathaniel Witherall. I'm involved with them on their board, and they're a group that helps those people at Nathaniel Witherall, the elderly, have a better quality of life. So they support programs for mental health, etc. And again, this is one of those, like, Friends of Nathaniel Witherall. I'm not giving the money to Witherall. I'm giving them to the charity, the 501c3. And I know that those funds are going to be used to help quality of life. So kind of knowing what you're giving to, being sure that you can
Yes.
deduct and donate. These are all really important things. So we've got about a minute or so left. Sabrina, how do people get in touch with you?
Okay. Well, they can go to our website, www.dileocharles.com, which is DileoCharles.com. They can email us at info@dileocharles.com, and always happy to talk to people and answer any questions they might have.
It's important. And last couple things. So you want to meet with your tax planner before the end of the year. What else do you want to do?
Financial advisor. Make sure you have your records. If you did not get your acknowledgments, chase those down.
Okay. Thank you, Sabrina, so much.
Thank you.
This portion of the show is brought to you by DiLeo Charles and Personal Testimonial. They are wonderful. So this is Trevor Crow, Trevor and Friends. It's been a really lovely day. We've been talking about financing, about Giving Tuesday, and we'll be back next week. This is WGCH, and everybody have a safe and happy week, and stay well.